All right, welcome to Talk Tickers. Today we're digging into Bowman Consulting's wild third quarter earnings report. On the surface, it looked like a home run, but the market? Yeah, it responded with a massive sell-off. So what in the world happened here? Let's get into it.
So this is the big question, right? The puzzle we're trying to solve. How on earth does a company crush its earnings estimate by 65% and then watch its stock just crater by more than 22% in one day? I mean, that kind of disconnect is what gives investors whiplash.
And look at this. This chart just lays it all out, plain and simple. On one hand, you've got this incredible 65% earnings beat. I mean, that's the kind of number that should have champagne corks popping. But on the other hand, a brutal 22.4% drop. This wasn't just the market being a little nervous. This was a flat-out rejection of the story Bowman was trying to tell.
Okay, so here's how we're going to unpack this whole thing. We'll start with the beat and the plunge itself. Then we'll break down the headline numbers. After that, we'll get into the real meat of it, why the market freaked out. Then we'll look at the growth story management is pitching, and we'll wrap it all up with our take on what to expect from the next call.
All right, first up, the beat and the plunge. Let's look at this collision between a stellar quarter and a really brutal verdict from the market.
You know, if you just listened to the earnings call, you'd think everything was fantastic. Management's tone was super bullish. They were talking up big wins, like hitting that $500 million revenue run rate, and basically painting this picture of a company firing on all cylinders. But the market just wasn't buying it. Not at all. The reaction was fast and it was ugly, which tells you investors were looking past the happy talk and saw something they did not like.
Okay, so let's move on and actually break down those headline results. What exactly were the numbers that management was so excited about?
So let's look at this table, because the story really starts here. Check out the adjusted EPS, 61 cents. The consensus was 37 cents. That's not just a beat, that's a demolition. And then you have GAAP net income. I mean, look at that, up 725% year over year. Just incredible numbers. But here's the first clue. Look at gross revenue. They hit $126 million, but the street was looking for around $129 million. Now that might seem like a small miss, but in this kind of market, that was the first crack in the armor, for sure. And management, of course, was focusing on all the good stuff. They were hitting some really key milestones they'd promised shareholders. Finally hitting that sustainable GAAP profitability. They were celebrating crossing that $500 million annualized revenue mark, which is a big deal. They doubled their operating cash flow. They cut back on stock-based comp. I mean, from where they were sitting, it looked like they were knocking it out of the park.
And what was fueling all that confidence? This number right here, $448 million. That's their project backlog, and it's a new record for them, up a really healthy 18% from last year. Now, for a company like this, the backlog is everything. It's your crystal ball for future revenue. It shows you have strong demand. This right here was the cornerstone of their whole positive story.
Okay, so now for the big question. Let's get to the heart of it. Why did the market sell off so hard? This is where we really have to read between the lines and figure out what investors were seeing that management wasn't talking about.
And this really gets to the two sides of the coin here. Management is looking at the world through one lens. They see strong cash flow, GAAP profitability, that huge backlog. But the market's looking through a completely different lens. And what they see is that little revenue miss we talked about, a huge chunk of profit coming from a one-time tax benefit, and, this is a big one, a real question about where the growth is coming from. Is it real, organic growth, or are they just buying it through M&A?
So let's talk about that tax benefit, because this is super important. Basically, some new tax rules changed, and it allowed Bowman to just release $3.5 million that was sitting on their books right into their net income. Now that looks great on paper, right? It made their GAAP income look huge. But savvy investors saw right through it. They knew it was a one-time accounting trick, not real performance from the business. And when they see that, they call it low-quality earnings, and they just ignore it.
And then you get this quote from the CFO during the Q&A session. I mean, you couldn't have scripted this worse. Somebody asked him about revenue picking up in Q4, and he basically shrugged it off. He said the pickup was just a couple days worth of work, and get this, nothing extraordinary. I mean, wow. If the market is already on edge about your growth, that's not what you want to hear. It sounded like a massive red flag that things were slowing down.
So, despite that brutal market reaction, management really wanted to shift the focus to the long term. So let's look at their growth story. What's their plan to get to 2026 and beyond?
If you look at where their future business is coming from, their backlog, you can see their strategy pretty clearly. Yeah, building infrastructure and transportation are still the biggest slices of the pie. But the real story, the growth engine, is that power and utility slice at 23%. I mean, think about it. Electrification, renewables, upgrading the grid, that's a massive trend, and that's where Bowman is putting its chips for the future.
So they laid out this whole growth blueprint, and it's basically a 4-step plan. Step 1, get bigger, but do it smartly. Step 2, go hard on acquisitions in that power and utility space to really become a leader there. Step 3, use their own innovation fund to get more efficient. And finally, step 4, as they get bigger, spread their costs out to make more money on every dollar of revenue. It's ambitious, for sure, but you can see what they're trying to do.
And if they pull all that off, this is what they're promising for 2026. They're guiding for revenue somewhere in the ballpark of $465 to $480 million. But here's the really important part. They're targeting an EBITDA margin of 17 to 17.5%. So what does that mean? It means they're expecting decent revenue growth, but a really meaningful jump in how profitable they are. This right here is the long-term story they're trying to sell to Wall Street.
Okay, that brings us to the finish line, the next call. We're going to give you our take on what all this means and what the road ahead looks like for Bowman.
So what's the verdict here? Well, the market has spoken, and it has officially derated this stock. That 22% plunge wasn't just a blip, it was a fundamental reset of expectations. The bar is way, way higher now. No more smoke and mirrors with one-time gains or just buying growth through acquisitions. From now on, it's all about one thing and one thing only: pure, clean, consistent organic growth.
So after digging through all of this, we're assigning a rating of market perform. Look, the company's not broken, it's got a solid foundation, but we think the stock is just going to tread water for a while, probably moving in line with the rest of the market until, and this is the key, until it can prove to a very skeptical Wall Street that the organic growth is real and it's here to stay.
So to sum it all up, our thesis is pretty simple. Bowman is a good company. They're a solid operator with a totally reasonable long-term plan. But make no mistake, after this last report, the stock is officially in the penalty box, and it's going to stay there until management delivers a clean quarter. No excuses, no one-time tricks. They need to show two things: that organic revenue is picking up steam, and that their earnings are legit, not just propped up by accounting moves.
And that's our breakdown of Bowman's very eventful quarter. As always, remember to do your own homework. This is not financial advice.